You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello. Hi, everyone. Welcome back to the Infinite Banking Mastery Podcast. Thank you again for being here, for listening in. Creditor protection. That is today's topic. Now, imagine you're going out for an evening. You're going out for a night out, an evening of fun, out with a friend or a spouse, and you get into a car accident. Oh, no. And then you're at fault. Great. And you just so happen to have hit a top surgeon in your area who is very badly injured. So he goes to the hospital and his hands are damaged. He needs a lot of surgery himself. And so you can expect he will be coming to you for money, your insurance company. And the question is, how much liability insurance do you have? Do you have enough coverage for something like this, or enough umbrella coverage? It's most likely what you're going to need. Or do you even have umbrella coverage at all? Something like this, when a lawsuit from somebody who has major medical expenses and has the type of career that, if he's hurt in an accident like that, damages his future ability to earn, you could really be looking at losing the majority of your assets if you don't have enough umbrella coverage, or even garnishment of your wages. Now, this is a pretty ugly picture that I painted, but I did want to point out just another awesome win of whole life insurance is that it's a great place to house your wealth because it comes with asset protection. Whole life policies can provide asset protection. Now, before I go any farther, I do want to put this disclaimer out there that I am not an attorney. So in your state, wherever you're located, if this is something you want to look into, of course, it's going to be best to find local counsel to help you figure out how much coverage or how much of your policy is covered and protected from creditors in your state. The cash value and death benefit of your policy is creditor protected in most states, but it does vary. So what happens is when a creditor obtains a judgment or a debtor files bankruptcy, that creditor or debtor's assets can be attached to satisfy those debts. That asset then has to be liquidated and the proceeds used to satisfy the debt. However, certain asset categories are immune or exempt, either partially or fully, from being attached or from being forced to be liquidated to satisfy that debt. Every state has exemption laws, and again, these exemptions do vary quite a bit from state to state. One thing to note is that the IRS does not apply. These rules do not apply to the IRS. So if you owe Uncle Sam can come after this asset too, the asset of life insurance. Basically, a creditor is not able to come after your whole life policy's cash value to satisfy a judgment up to the exemption amount in your state. Some states offer a full exemption, and others will state an actual dollar amount. Some will say up to $20,000, $250,000, or $500,000. Again, it just varies a lot. There are some exclusions to these exemptions. For example, if a policy was purchased on purpose in order to defraud creditors and the court finds out, well, that exemption in that state is not likely to be available. Another exclusion would be if your policy's cash value is pledged as collateral for a loan, then that cash value won't be exempt from the claims of that specific creditor. In most cases, policies can be exempted if you're filing for bankruptcy, but you will likely need to disclose it, and it depends again on your state's exemption laws. Although if you just received a death benefit, if you were the beneficiary of a life insurance policy and you have creditors coming after you're trying to claim bankruptcy, then the proceeds may not be exempted. Your life policy is a private asset, which is a major advantage of whole life insurance. Sometimes I get clients asking me, if they need to wait for a tax form from the insurance company when they're filing their taxes. Am I waiting for something? Do I have to disclose the earnings from the year? And the answer is no. It's very awesome. You don't need to report your policy's earnings or anything about your policy to the government on your tax return. It is not something that needs to be disclosed. And yet another major win for whole life is that this asset doesn't need to be disclosed when you're applying for federal aid. So if you happen to have a child applying for college and they are seeking assistance through FAFSA, your life insurance policy cash values do not need to be disclosed. This is one of many reasons why this is the vehicle that we choose to save the majority of our resources into, and that we're saving into for our children's college needs or schooling needs. Because in addition, if they end up not wanting to go to college, well, then they have the freedom to use the funds however they like, maybe for their first house. And certainly we can all see how expensive housing is getting. It would be cool for them to be able to get to that age and already have a down payment for a house ready to go if the funds aren't used for something else like college. Although certainly it's possible for them to have a large enough policy that they would be able to have enough funds for both things to help them fund their college years and also to have a down payment for a home. Or sometimes you have these policies for your children and you can designate that amount for their future needs, maybe their first car, maybe they're going to get braces in their high school years, their college, private school in their middle and high school years. You can have that policy to help keep the accounting more clear for the use of that policy. And you also can use your own policy for helping them through college. If some people get really focused in and say, oh, well, this policy is for them for college, will there be enough? But if you have a large policy on your own life or your spouse, you can also tap into that for their college expenses if that's something you wanted to help them through and do for them. So to do a quick recap, there are all kinds of things that could happen that could cause someone to come after your assets. Fault in a major accident, your dog could cross the street and bite your neighbor, somebody could get hurt at your home, and maybe you don't have enough liability coverage for one of those things. So to come after your assets, or maybe something happens in life, major medical expenses from something catastrophic that happens that could cause bankruptcy or overdue debts. When things like this happen, your assets can be attached to a claim or garnished. Your wages could be garnished in the future. But depending on your state, some amount of your cash value, up to the full amount, could be protected. And I'll just say again, to make sure of the rules in your state, you should contact an attorney in your state. Interesting topic, something new that you were able to learn or get a more clear understanding of. If you're feeling ready to look into infinite banking for your family or the process of infinite banking further for your family, and you would like to work together and start up a whole life policy for yourself, please reach out. You can reach me at my email, valerie@alphaomegawealth.com. Again, when I see your email, I usually do respond within 1 day. So if you do not see a response, please check your spam folder. I hope that you have a great rest of your week, and I'll talk to you next time. Take care.
This is the podcastfactory.com.